My name is August Peterson. I cover domestic financials for the Marquette AIM Fund, and today I'll be pitching Goosehead Insurance. Currently trading at a price of $80.30 with a price target of $118.61. Goosehead Insurance is an independent agency offering personal lines of insurance through more than 145 carriers. The company was founded in 2003. They went public via IPO in 2018. They're headquartered in Westlake, Texas. The company's share of total written premiums include homeowners at about 57%, automotive at 40%, commercial 2.5%, and other. Revenue is generated through Goosehead's corporate channel, about 55%, consisting of company-owned and financed operations with employees who are hired and trained by the firm. The other half of the revenues are generated by its franchise channel, which include operations that are owned and managed by franchisees. There are principally three types of businesses that sell personal lines insurance products. There's direct distribution, which is about 20% of the market share, and that's where insurance carriers market their products directly to customers, so think Geico or Progressive. Then there's captive agents, which account for about 44% of market share, and they sell their products for only one carrier, and they earn revenue through sales commissions based on premiums placed on behalf of clients. Goosehead Insurance operates as an independent agency, and those account for about 36% of market share. And they have the freedom to leverage multiple carrier relationships to offer their clients an array of insurance products at the most competitive prices. In 2003, Robin Jones was struggling to find an insurance provider that she felt was knowledgeable and cared about her real estate business. Mark and Robin understood the importance of long-term value creation as a function of service quality, and since have created a service-oriented insurance agency with a net promoter score over 2.5 times the insurance industry average, NPS meaning a measurement for customer loyalty and satisfaction. Led by customer-centric founders Mark and Robin Jones, Goosehead Insurance has generated highly predictable recurring revenue since its founding, evidenced by its 10-year total written premium CAGR of 40%, with a premium retention of 93%, and a 4-year revenue CAGR of 36%. Apart from having predictable recurring revenue, Goosehead also provides an exceptional value proposition for all parties involved. Through its franchise channel, Goosehead separates the sales function from its service function, enabling agents to focus on building their book of business, while the company focuses its service personnel on delivering superior client service. Franchisees are given access to Goosehead's 145-plus carrier relationships, implementation systems, and a back-office support team to place insurance. So essentially, agents benefit from focusing on sales and marketing with the understanding that Goosehead's centralized service team retains clients at 89%. Additionally, buyers' apprehensions are appeased by the independent agency structure, knowing they receive a competitive price given the quantity of carrier relationships, and carriers who are concerned with maximizing the lifetime value of a client relative to the cost of acquiring them are attracted to premium retention rates over 90%. Because of industry tailwinds, new client referral initiatives, and latent margin expansion, it is recommended that Goosehead be added to the AIM Small Cap Fund with a price target of $118.61, representing an upside of 47.7%. Many insurtech companies attempt to disrupt the insurance industry by bringing to market online purchase channels that underwrite and offer claims in a matter of minutes. Although convenient, these startups fail to realize that most individuals prefer to take the extra time to speak with a trusted agent, outsourcing the responsibility of finding the most appropriate claim, which is evidenced by a historically consistent, roughly 80% of total written premiums sold by agents. Goosehead also recognizes that the average age of insurance agent principals is 55. Where 9 in 10 agencies have a perpetuation plan, and 4 in 10 anticipate some ownership change in the next 5 years. To combat this trend, the company's average corporate agent is 27. Goosehead is aptly positioned to gain from displaced clients and avoid the shrinking workforce challenges faced by many competitors as their corporate agents can build longer-term relationships. The benefit of age, coupled with the company's separation of sales and service functions, has allowed corporate agents, tenured 3 years or more, to generate 2.9 times as much new business production per agent as the industry best practice. For these reasons, new business commissions, corporate revenue, are forecasted to grow at 15% in fiscal year 2022 and grow at a decreasing rate of 100 bips thereafter. Few companies can grow at a 45% annual rate on virtually no advertising. With customer acquisition costs in the P&C industry sitting well over $1,000 per customer, management has made it clear that Goosehead is not competing in the space. What they are focusing on is leveraging their referral network to bring the best product and customer experience to market. With a customer satisfaction score of 91, yet only 1/3 of new business currently generated from referrals, management recognizes Goosehead's pain points in its referral efficacy and cross-selling strategies. By budgeting $2 million for marketing in 2022, Goosehead looks to improve in these areas via possible partnership opportunities and other digital marketing strategies. Ann Chalice is a newly hired CMO with prior experience leading marketing teams at BlackRock, Wells Fargo, and other fintechs. To account for this growth, new business royalty fees, franchise revenue, are forecasted based on recruiting agent productivity. Despite high conviction that new leadership and marketing dollars will make the recruiting agent's job superfluous, Quarterly net adds per agent were conservatively estimated at 1.5 times, historically at about 1.8, and decreased as a function of time at 0.07 times per year. Goosehead's moat expands as its business grows. Carriers are drawn to Goosehead's ability to maintain strong premium growth with a dedicated service team committed to retaining premiums above 90%. As Goosehead continues to prove its ability to expand new business at high retention rates, carrier relationships will expand, allowing the company to offer an even broader array of products at even more competitive prices. Presently, Goosehead invests through its P&L to drive growth through SG&A and R&D expenses. Since employee compensation grows as a function of employee growth, this expense cannot sustain historical growth levels as total employee growth plateaus. A similar relationship exists with G&A expenses. To err on the side of conservatism, employee compensation and G&A expenses are both modeled on a per-employee basis, increasing as a function of time per employee but decreasing as a percentage of total growth year over year after fiscal year 24. Revenue growth, driven by an increase in carrier quantity, less diminishing operating expenses, allows EBITDA margins to grow at an 11% CAGR over the next 10 years. Here's a breakdown of my valuation methods. The discounted cash flow model uses a 10-year horizon, and a sensitivity analysis is listed on the bottom right. I don't think it's appropriate to use relatives to value Goosehead. I fundamentally believe that Goosehead has a competitive advantage with its service quality, and it's for this reason that it shouldn't be priced similarly to its peers. Because of this, I've weighted my DCF model 70% and the other three relatives at 10% to get a price target of $118.61 with an upside of 47.7%. I've identified three prominent risks with investing in Goosehead. One is insider selling. In 2018, Goosehead went public with a 65% non-controlling interest in the operating entity Goosehead LLC. Founders Mark and Robin Jones have since diminished this NCI to 50%. Two is emerging purchase channels. An independent study found that 35% of agencies believe direct distribution of P&C will have a significant impact on their agency in the next 2 years. A shift away from agent sales might force Goosehead to engage in the absurdly high customer acquisition cost of personal lines customers. And three is referral productivity regression. Much of Goosehead's value is directly or indirectly attributed to recruiting agent production. Any threat to productivity can materially impact the firm's free cash flow. Customer-centric co-founder, chairman, and CEO Mark Jones founded Goosehead alongside vice chairman Robin Jones in 2003. 3 years later, the first of three Colby brothers joined the firm after spending several years at KPMG in auditory services. Michael Colby, now president and COO, joined in 2006. Mark Colby, now CFO, joined in 2012 after 3 years at Ernst & Young, and Matthew Colby, now VP of Agency Sales, joined shortly thereafter.